Hello, YouTube. The stock market flipped after we broke through resistance, and now it looks like the bulls might want to retest 476. But the question for today is, do we buy or do we sell? The question is whether or not we have patience to see the pattern play out. We've been going through this extensively, and we will look at charts a little bit later in the show. But we're now right back here to the doorstep of extreme greed. And with a weekly higher high, Warren Buffett's quote is going to really come into play here because what I laid out on the weekend was that, again, I have an opinion. My opinion could be wrong, but I've been doing this long enough that I think I know my recipe. I know what I am looking for. And if you're watching this video, I will give you an update on number 3. So here's what we had so far. We have a warning with a failed breakout. We have early confirmation, but we do not have actual confirmation. The part that was really tricky is that we closed at or near the low of the week last week, which usually means that we're going to go down more. We did the exact opposite. What did we do? We gapped up, pushed up, and we actually took out last week's high. So what does this mean? Oh man, is Justin wrong? That's what I'm going to walk through. I'll tell you exactly where I'm right and where I'm wrong. We do not have confirmation. And now we actually need to flip this last part here. So I said that by closing at or near the low of the week, I thought the odds were going to be that we're likely going to print a lower low, kind of like here, kind of like here. But the question was going to be whether or not we would remain below the low, meaning, are we going to get a breakdown or are we going to get a fail breakdown where it actually rallies back up? Well, now that's the exact same question that I would flip here. So we had a warning, we had early confirmation, but no actual confirmation. So what do? Well, now we flip it upside down. If we don't hold the higher high into Friday, there's a lot of big data. It means that we're going right back to a warning where we get another failed breakout. Then what do we need? We need another early confirmation with the weekly lower low, and then yet another weekly low or 2 below. If this confuses you, please bear with me. I promise I will walk you through and make it as easy as possible to follow. So we're on the doorstep of extreme greed. By the way, do we buy greed or sell greed? Oh, we sell it. Yes, but not all sells are created equal. Why? Because the saying is that we want to expect the best, be prepared for the worst, and be ready for a surprise. Well, the market got surprised today. And NVIDIA came out and said, yep, that's it. We got a new chip. And the stock went to a new all-time high. That's pretty bullish. If we also look here to Bitcoin, Bitcoin is booming on what? On some hopium that we're going to be getting that spot Bitcoin ETF. It is up by nearly 7% today. So what is that? That is risk on. So do we buy the dip or sell the rip? Please bear with me. I'll make this as short as possible. So I mentioned that under 470 was bad. Under 480 is good. Where is the S&P right now? Well, it's at 474.6. So where are we? We're solidly in the yellow light. We're stuck between what is bad and what is good. If we're truly going to break out to a higher high, getting higher by 5 more points should not be that much more of a challenge. It's less than what we even put in today. Today, we rallied by 6 points, 6.6. We get 6 more points tomorrow. Boom. New all-time high, blue sky breakout. Everything gets easier for us to go higher. And I'll explain the reason why really fast here. Chips lead tech lead SPY. We went through this on the morning stream today, by the way. So SMH is already in a blue sky territory. It's a lot safer. Why? It's already in blue sky territory, and it did not fall back below its previous all-time high. If we look here to XLK, exact same story. Still in a blue sky breakout. We're looking at an annual chart, or we're trying to compare apples to apples with this chart. So let me go here and actually make it a full candle to make it all the way the same. XLK, there's nothing to worry about here. If we now flip here to QQQ, well, we're not in a blue sky breakout. So chips are leading. XLK is a lot of Microsoft and Apple. Those are in blue sky territory. Apple rejoined the club today. It got back above here to a blue sky breakout, back above 183. But what's missing? Well, QQQ. QQQ is going to include more of the NASDAQ 100. It is not in a blue sky breakout. So this chart here is closer to resistance than it is to support. That's the warning. And then finally, S&P. Oh, crap. Right? Yeah, we're not in a blue sky breakout. So we're really close to resistance. So close, we're within 1%. But what do we have? High for 2002, lower high for 2023, lower high for 2024. This does not get me excited. So what am I going to do? I'm going to be patient. For what? For the pattern to break one way or the other, or for us to get more data. And by more data, I mean, I'm going to want to see a monthly candle close out. So what that means is that as of right now, if I go back here to S&P, if you forgot, my bull scenario is still intact here. I talked about SPX, and What I mentioned is that I think we're due for potentially 11 months of higher, but if we can't get above 480, how the hell are we going to get to 490, 500, 500, 510? We're not. We're going to stall out. So if we're really bullish for the market going higher, it is good or easier for us to get higher when we're over 480. I just showed you XLK, SMH, Apple, but S&P is not there yet. So I think it's premature to say that the stock market crash is canceled. I'm pretty bullish. I have a level of 5,600 if this continues to play out. And the final part that I'll mention here is that we were looking for a short-term corrective wave on the weekly chart, which gave us evidence here. We stopped going up, ended up being a trap. But we'll find out by Friday who was trapped, the bulls or the bears. So we'll have that Friday stream for you, which is going to be a trap like any given Friday. And the most important part here that I mentioned is that we're currently on step 5, which means we're looking for higher lows and higher highs. What do we have so far in this month? Well, we have a higher low, but we don't have a higher high. So it's like pretty mixed here. We're right at resistance. We got a really nice thrust today, but is it enough? All right, now go through and tell me because you're talking a lot. This is what I want you to think about. Be like Warren Buffett and ask yourself, what are you going to regret more? Because as important as it is for us to make money, Warren Buffett's rules are rule number 1, don't lose money. Rule number 2, see rule number 1. What does Warren Buffett prefer not to do, right? Which one is he going to regret more? He's likely going to regret number 1 more, where he buys and it goes lower. Why? Read the quote. The stock market is a device for transferring money from the impatient to the patient. What is he going to do? He's going to be patient. He's a value investor. And then number 2, I do not buy and it goes higher. Oh, crap. So for me, I'll tell you what I regret more. I usually regret this one more. I buy and it goes lower, right? Warren Buffett agrees. What's rule number 1? Don't lose money. How do you lose money? By buying something and watching it go lower. How do you, what's the rule number 1? Well, rule number 1 says don't lose. So whether or not you're number 1 or number 2, this is what you want to think about. Are you going to be patient? Do you want to try a system that's been tried, tested, and true by Warren Buffett for decades, 50 plus years? Or do you want to take a shot in the dark and hope it works out? We're so close to resistance that if you're gonna put a support area in, I'll walk through 2 more quick things, and then I'll tell you exactly what my plan is to go through right now. All right, what are you going to regret more? And as a preface for this, we went through and talked about all the things we need to do. I will leave you with the weekend video at the end where we talk about all these different indicators. We talk about the odds for a rate cut. I have it right here. It's actually lower. The stock market should be down, but it's not. So like something's funky. Yep, something's funky. I don't like it. I don't trust it. And that's okay. I don't need to trust it. Why? I'm going to regret buying and it goes lower because I said I don't want to buy until we see a few weekly higher highs, which is a pattern, or we see the month of January close out. So we went through all of this stuff, and I don't want to beat this dead horse because I went through it all again, but I gave you all these different inverse algos here, which tell me that it's time for us to be cautious. Why? On the weekly chart, what this means is that we can either, we're overbought. So that's why we're due for a dip. We were overbought because we got too much too fast. And now if we go sideways, we can burn off those overbought indicators. By going sideways, we're actually going to reset the overbought condition. But I'm not sure we're going to go sideways. If we go up and up and up, we're going to remain overbought. We're at risk of a sudden drop. That doesn't get me excited. Why? I want to be patient. Right now is not an ideal setup for me. If we're investing on a weekly chart, but there's a lot of key data that will come out, I'm talking like big important data, which I don't feel particularly good about. We got a 10-year auction on Wednesday. We got CPI coming out on Wednesday, a 30-year bond auction, and then PPI. I would rather see how this weekly candle closes out, which means that if we actually get a lower low this week now, which could still happen, that would be a bearish engulfing pattern. If we close below that low, that will be the definition of a bearish engulfing. So what do I need to see? I need to see a few candles. So now let's go back here to the S&P one-day chart because I'll show you what I'm looking for. And then like I mentioned, I will go through and give you that update here. So just like on the weekly chart, we're looking for a pattern. A pattern can only be identified with a minimum of 3 candles. We have our low, a higher low, and then on the third candle, if we form a third candle, we have 2 times higher lows. And if we go over the high, 2 times higher highs. Higher highs with an S. If we only have one, there's only one single higher low, one single higher high. What is that? It's a dead cat bounce. It's not a reversal. It's not a reversal until we build a staircase of support and actually form higher highs and higher lows. And because we're so close to annual levels and we're right at 476, I don't feel comfortable. It's okay if I don't feel comfortable. It doesn't mean you have to either. Does not also mean we need to go net short. Buying some insurance is great. Raising cash is great. But what's really important is that we want to give the chart time to actually play out, because if we flip flop like flapjacks every time we have a 1 day on a 1 week pattern, we're not giving the chart enough time to actually give us the confirmation or to void it. I already told you, we can still form this 2 times lower low and close below the low. That would be a bearish engulfing pattern, which is what? Pretty bearish. Bearish engulfing patterns are pretty bare. Look back to here. There's a bearish engulfing pattern. Slam, slam, slam. Oh, crap. There's another bullish engulfing pattern right here. Ended up being the bottom. So there's a lot of different patterns we can look at, but the one that I'm finding reliable is found here on S&P. But now let's look at QQQ. If chips lead tech and tech lead SPY, does QQQ have a weekly higher high yet? No. And we talked about how it's not at all-time highs, and there's still a gap on the chart. So now I want to see QQQ follow like ASAP. I want to see that continuation go through. I want to see it print a higher high, and I want to see it get to 407.5. All right, now the best part. Let's walk through and tell you exactly what I'm going to do to update my thinking as it relates to here. I'm going to give you a 2-step recipe. I think it's 2 steps. I'll correct myself if I'm wrong. I want to see us either back above 480 on a monthly close. That's number one. So let's go here to S&P. This would be our 1-month chart. So I'm looking for one of 2 things. And I'll actually type this up so I can be accountable and I can show this to you as an update in future videos. So number one, I need to see January close over 480, which means we're in blue sky territory, just like XLK, just like SMH, or 2. Jan has to close out. So I can reset the stop. And I'll show you exactly what this means now. So if January closes out over 480, hey, that's good. It's great. Right. Gravy train continues. Let's jump on. Let's make money. Yeah, we're bullish. But what if we don't? Well, that's bad. So right now, I've told you that the pattern I'm looking for to hold up, I'll go back to SPX for 1 minute. Sorry for bouncing around so much. It just makes it easier for me to keep my notes together. I think we could go higher for 11 months in a row, but that will only happen if we form higher lows and higher highs. If we form another monthly higher low, then it means that in February, we cannot go below the January low. So what does that mean? It means that if this low held right here at 466.43, that's where our stop goes for next month. Let's go back to our pattern here. So I explained how January closing over 480 is step number one for me to get really bullish. I'll be patient. I can afford to wait 2-3 weeks. That's okay. I'm still green on the year and the market's still a little bit red. I don't want to get cocky, but I'm okay to wait. I'm okay to be patient. Number two, January closes out below 480, and then we can reset the stop. Why? One more time, I'll make it really obvious for number two. The second we print a lower low on the monthly, that's where we go up, we go sideways, and then we go back down. As soon as we start going sideways, I'm going to be cautious. So as of right now, if we don't hold this area, we have to be ready for 455, which is what I already have laid out. If you're going to buy up here, but you're going to get scaredy pants on strong support, which is 455, it's not time to buy. It's time to wait. It's time to be patient. And that's it. That's all I'm going to preview for today. So if you want to go back and watch my weekend video, that's now queued up here on the left-hand side. If not, subscribe on the right-hand side and come hang out with me tomorrow at 9:15 Eastern, where I will walk you through the stock market open. Thank you very much for tuning in. I truly appreciate your support.